I want to talk about the contribution margin because this is the first time we're seeing it, but it will be part of every single chapter moving forward. Super, super, super important thing. We often think of sales as being the amount that we earn from a sale, like the selling price. So for example, if I sell a t-shirt and I sell it for $50, we think, okay, I made $50, but you didn't actually make $50. You didn't actually earn $50 because of your variable costs. We learned in chapter 2 what a variable cost is. A variable cost is a cost that you incur more of as you produce more units. Another way of thinking about it is a cost that you incur every single time you sell or produce a unit. So if you're making t-shirts, the fabric, so the direct material of the t-shirt, it's not a fixed cost because every single t-shirt you sell needs fabric. The person that's going to sew the t-shirt together is variable because for every t-shirt you make, you need to pay somebody to put it together. And so even if you sell the t-shirt for, say, $50, if it costs you $5 for the fabric, that's direct material, it costs you $10 for the person to sew it, and let's just say for the sake of this example, those are the only two variable costs, really what you're making from every t-shirt is $35. That's what we call the contribution margin. The contribution margin is what you get when you take your sales and you subtract from your sales your variable costs. And that is actually how much you make every time you sell a product. So every time I sell a t-shirt, there's $35 coming in, not $50. Because yes, $50 comes in, but then right off of that, we lose $15 to the variable cost. I cannot make a t-shirt without spending $5 on material. I cannot sell a t-shirt without spending $10 on labor, okay? So very important to understand that because moving forward, this is going to be the main thing. Whenever we're going to be calculating pretty much anything related to sales, most of the time it'll be based on contribution margin. So you see that they have this big box here because your contribution margin can be expressed in three different ways. You have the first one, which is the total. Total contribution margin refers to the total amount you earn from selling all your t-shirts, not just one, but all of them. So the formula is sales, total sales, minus total variable cost, TVC. You can also find it on a per unit basis, CMU, CM per unit. Two different ways to do this depending on what you're working with. You can take the total contribution margin and divide it by the number of units if you have that information. Or you take the same approach as this, but on a per unit basis. So instead of sales, it's selling price because the selling price is your sales per unit. And instead of total variable cost, it's variable cost per unit. And the third way to express it is as a ratio. It's called the contribution margin ratio, CMR. So this one, again, can be done two ways. They're both the same. Basically, it just depends on what you're working with. So if you're working with totals, you would take the total contribution margin divided by your total sales. If you're working on a per unit basis, you take your contribution margin per unit divided by your selling price. And this is basically expressing it as a percentage. So if I go back to my t-shirt example, I make $35 per t-shirt, but if I were to take that as a percentage of the selling price, it's 70%. That would be your ratio. You're actually bringing in 70% of the selling price. That's how much is actually being contributed to the business. Okay? And why this isn't profit, guys, is because we haven't talked about fixed costs yet. Now, they're closely related, obviously. The basic idea here is you make a sale. You sell a t-shirt, for example. You get $35. Because $50 comes in, you pay for your variable cost, you get $35. That $35, that contribution margin, is what we use to pay for our fixed costs. We're going to pay our rent, we're going to pay our electricity, whatever. And whatever is left over after your fixed costs have been paid goes directly into your profit. We're ignoring taxes for now, but the point is your contribution margin, once all of your fixed costs have been paid. Let's say my rent is paid, everything is paid that month. Every single t-shirt I sell, I get $35 directly into my profit. Now, it's not a question of, which one do I need to know? You need to know all of them because there's a time where you need the total, there's a time where you need the per unit, and there's a time where you need the ratio, okay? So we'll go over all that together. This is very important. Pretty much everything else after that is just an application or a use of these things, okay? But these are really the foundational pieces to what we're doing in CVP analysis. So what is one of the most common questions? It's calculating the break-even point. Now, we should all kind of know what that means, but in case you don't, the break-even point is the exact point where you're not making any profit, but you're not losing any money. It's the point where your revenues equals your expenses. Now, in classes like Math 208 or whatever, this is how you would do it. You would do revenues equals expenses, but we have a different formula that we use in 305. And again, it depends on what they ask. If they ask you your break-even point in units, meaning how many t-shirts do I need to sell to break even, the formula is the total fixed cost divided by the CM per unit. So if they want to know in units, you use CM per unit. Or they might say in dollars. So instead of it being how many t-shirts do I need to sell, how many dollars worth of t-shirts do I need to sell? Like, what do my actual sales need to be? It's the same formula, you just divide by the ratio. And that's a rule you kind of want to remember, not just for this, but also for the next one. Whenever you want your answer in units, you use CM per unit. If you want your answer in dollars, you use a CM ratio. Very common question. I bet it's on every single exam, 3, 4, 5 marks, okay? So let's start there. Instead of going through every single formula, let's begin our exercise just to kind of get us in the right frame. So this is the information I chose to give you. It's almost always the same, but you know, the way that they present it could be different. For example, I chose to give you the number of units in the question. Sometimes they don't. If they don't give you the number of units, they're going to give you the selling price. I didn't give you the selling price. So, you know, I made one the unknown, and we're going to solve it using the other one. I gave you your costs here on a unit basis. They might give it to you on a total basis, right? But the type of information you get is pretty much always the same. One thing I like to do, whether they ask it or not, when I start a question like this, so I have this like checklist that I go through in my head, and I want to know the number of units I sold. They gave me that as 10,000. I want to know the selling price. Oh, I don't have that. So how am I going to find it? Well, I know sales. They gave me my total sales. So SP for selling price, if you take 1 million divided by the 10,000 units, 1 million divided by 10,000 units, I know that my selling price is $100 per unit. So this is something I always want to have. If you're writing a list here, so far I've said units, and I've said selling price. I want to know those things. I also want to know my total variable cost and my total fixed cost. So here, what do we know? We know that direct material is variable. I'm going to put a V next to it. Direct labor is variable. Variable MOH is obviously variable. And variable selling and admin is variable. So if I put all of those together, 20 plus 15 plus 16 plus 9, plus 15 plus 16 plus 9, I get $60. But this is not my total. This is my VC per unit. If you want to know the total, you need to multiply that by the number of units that you're selling. So that would be 600,000. So having your total variable cost and your variable cost per unit is very useful. Now, keeping in mind that on an exam you don't have unlimited time, I don't want you guys necessarily to start off by finding every single thing. So here, for example, I need the total variable cost. I needed to do it this way. But if you already had the total variable cost, I don't need you to also get the variable cost per unit. Unless you need it for something else, I would say deal with that when you get to that part of the question. So don't think that at the end of this, I need to start off by finding like 50 different things to then start answering the questions. But there are some key things like total variable cost and total fixed cost, units, and selling price you're pretty much going to need for everything. And so even though that's not the next, this is total variable cost, by the way. Total fixed cost, easy. They gave me my fixed selling and admin as 100K and my fixed MOH as 130. So I'm just going to put it here. My total fixed cost is 230. All right. Okay, so let's go through the questions. How do you find total contribution margin? Total contribution margin, TCM, is your sales minus your total variable cost. For us, that's 1 million minus 600,000, so 400,000. Easy. It's all formula based, okay? What is your CM per unit? CMU. Your selling price, SP, minus your variable cost per unit. So 100 minus 60. This was your VC per unit right here. $40 per unit is your CMU. Very important piece. Okay, CMR. Well, the CMR can be found two different ways, really up to you. You can use since we have everything here, you can do it whichever way you want. So you can take your total, which is 400,000, and divide it by your sales. And that would be 40%. You can also do your per unit, so CM per unit over the selling price. That would also be 40%. You see, it's the exact same outcome. All right. Now, on an exam, they're not going to ask you the questions in this way, right? They're probably just going to start off with break-even point. But in order for you to find the break-even point in units, you need your CM per unit and you need your total fixed cost. So to find your CM per unit, you had to have, found the variable cost per unit. So this is where having your formulas memorized is going to be very useful. The way I like to solve exam questions, so I see the question, okay, break-even point in units. First step, let me just write the formula. The break-even point in units is the total fixed cost divided by CMU. I start with the formula that will give me the final answer. It's difficult to start the other way. I like to start it, when I say the other way, I mean starting from the first thing you actually need to calculate. Because it's hard to know where you're going. Whereas if you start with the formula that will give you the final answer, you can work backwards from there. Say, okay, this is the formula that gives me my final answer. So do I have the total fixed cost? I do, 230. So let me go get that. And if I didn't, at least I know that I'm looking for it and I can go and get it. 230. CMU. Do you have it? Now, on an exam, if you didn't have questions A, B, C, and D, you likely don't have CMU. So you'd say, okay, I need CMU. What's CMU? And you write out the formula for that. You see, and you work backwards into the answer. Okay, I have the selling price, but let's say you didn't find the VC per unit. So now you have, okay, I need to find the VC per unit. So since we have CMU here is $40, we can do 230,000 divided by 40, which is 5,750 units. You need to sell 5,750 units to break even. If they wanted the answer in dollars, it would be the same formula, total fixed cost, but divided by the contribution margin ratio. So again, you find your total fixed costs, whatever they are, in this case 230, and then you ask yourself, do I have my CM ratio? If you have it, great. If you don't, okay, well, you calculate it and you plug it in. So this would be 0.4. So 230 divided by 0.4, 575,000. And look, this makes total sense. If you know your selling price is $100, if you sell 5,750 units at $100 each, you get this number. We're expressing the exact same thing in two different units. One is in actual units of your finished good, and one of them is in dollars. But it makes sense that if I take this and I multiply it by the selling price, I would get that answer. It's often a good, again, they rarely ask you for both on exams, but as you're studying, it's a useful step to take just to make sure that you're doing the math right. So I need my sales, my top line, sales revenue, to be $575,000 so that at my bottom line, my profit, I get zero. No profit and no loss.